Welcome to TradeTheMBI.com. This is John. This report is for the 4th of May, and we're starting off to a good start. Again, we've just been going sideways, and we talked about now we've achieved that point where money from funds should be starting to roll in. In fact, I think we started to see a little bit of it yesterday. Intraday, we started to see some nice ranges, and it was indicative of every time we reached a decent sell-off. There was buy signals, and we responded quite nicely off of each of them. So we're at that stage where if we're going to start to continue that move, this is going to be the time. NASDAQ is already back at its highs, so yes, it's gotten extreme, but when has that stopped the market before? It has. And you can see shorts have been increasing in this, so there's still power to elevate the market without a whole lot of new buyers. Euro making another continuation move. They had the big French debate being soured, but I'm sure they're recovering nicely. Didn't appear that there was any shocking revelation, other than the fact the two of them agree on absolutely nothing and are completely on opposite sides of the fence. Bonds, nice spark up. It's interesting, sort of in defiance of the Fed continues to appear that they're going to continue to raise rates regardless of what the GDP and or economic numbers are. So they have decided that Trump era is going to be a rate increase regardless of fundamental, which is an interesting divergence from what we saw during the Obama years, which I think that's an interesting one to look at. Definitely a complete change in policy. Oil, yeah, well, I know they keep touting that this is going, turn around, but again, without the economic growth, and until you see something of a resurgence, just the ability to produce is going to keep that at low to bottom levels. I added the fib level retrace here onto gold to kind of show what was going on from the DOC spread sell that we ended up back over here, and also the previous sells that happened. We're starting to get to an oversold. In fact, the number one is just appearing right now, and that 50% number, which right there, 118.54, actually becomes a little bit better of a turnaround once you get this kind of deep dip. The fact that the steel is also not that high is a bonus as well. So the sad part, I guess, is that without the real deep drop of the orange reset, you're likely to still trade across, so or lower. So I don't think the trouble is over yet as far as gold goes. But before we were talking about the ABM green, but now you can utilize that fib level as additional turnaround points. And I mean that you've reached oversold, like I said, that orange dip makes it problematic. Now here we started off with it. I posted this one as we were going in from the day. We were still in a short signal. We had reset right here. Came up briefly for a while, but they couldn't hold anything with that, and we ended up with the steel crossing below cyan. And then, like it often does, the steel crosses back above, which is typically a buy signal. Same time we had the orange dipping below red, green coming above. I mean, this is sort of like the confluence of everything you look for. And even if you didn't get this early bar, certainly the rising shakeout at that point, secondary one, nice move, and then we ended up with these little soft sideways moves, but they still ended up with buy signals within them, and we kept getting the orange dips below the red as we continued to rise, and well, here we are back at pre-highs. I guess we can shrink that a little bit and get a better view. There we go. A little bit more. So we're right back at the peak. So looking just like the NASDAQ. Now that you're at this 88 level, if we get to 92-ish range, then I think it's pretty certain we're going to reach 24. It's just a tendency of the market. Be surprised if we had a turnaround before then. So up and away. That's the word of the day, up and away. As always, though, look for me on the Skype chat. I'll keep posting up the charts. Trade well.